Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Tuesday, August 15th. We are going to take a look at one out of the consumer discretionary sector today, Havertys Furniture. Let's jump right in. Now this one is a recommendation from a subscriber, I believe they're a subscriber, Tanya Myers. Thoughts on IMMR and HVT. We are going to cover HVT. I'll try to work in IMMR at some point, but today we'll focus on Havertys. And if you want to know more about this company, check them out at www.havertys.com. And thank you for the suggestion, Tanya. A legacy of quality furniture and service, Havertys creates quality furniture specifically for you and your vision of home. We offer a vast array of style at an excellent value so you can create your perfect space. Our website is home to thousands of pieces, including customizable furniture that opens unlimited design possibilities. Our legacy, since J.J. Haverty founded Havertys Furniture Company in downtown Atlanta in 1885, we've grown to over 120 stores in 16 states to serve millions of customers. While many things have changed, our core values remain the same. We have continued to provide honest and friendly service and high quality furniture to help you furnish your dream home. And that is their bread and butter since 1885. So they've been around through all of the downturns that a lot of history has shown. 2 world wars, Great Recession, Great Depression, Vietnam War, the oil wars in the 70s, the recent financial collapse in 2008, COVID, the 1912 flu. So they've been around, come out the other side. Obviously, people need a place to sit in their homes. Home furnishings aren't going away. And that is what they cover, right? So furniture, decor and accessories, mattresses and bedding, and design services. And I clipped this out of their homepage there. So living room collections, sectionals, sofas, chairs and recliners, love seats, ottomans, coffee tables, accent tables, beds, dressers, nightstand, chests, benches, kids furniture, dining room collections, dining room tables, chairs, bar stools, buffets, office furniture, and outdoor furniture. I didn't clip all their brands, but I did go in and look at their bed brands, their bedroom furniture there. Tempur-Pedic, I'm sure some of these names you'll be familiar with. Serta, Stearns & Foster, Beauty Rest, Sealy, 1885 collection. So iconic brands here. Been around for a long time. Again, if you want to know more about them, www.havertys.com. They are out of the consumer discretionary sector, so they will be a little volatile and subject to recessions, right? In downturns like that, people are going to forego buying new beds and new furniture. So this is one that may be a little cyclical, and it presents opportunities whenever we go into a down cycle like we are entering, in my opinion, have been in one since 2019. The only thing that's really kept us propped up is the stimulus money from 2020. But that's for another video. If you want to know more about this company, www.havertys.com. That is their homepage. Let's continue on and look at the metrics here. We are talking about Haverty Furniture Company's ticker HVT, out of the consumer discretionary sector. They were down 0.66% on the day. Not a huge drop, but a drop nonetheless. And since it was a request and a drop on the day, I thought I'd cover it. Closed out the day at $33.35. 52-week range as low as $24.79, as high as $38.85. So they are closer to their 52-week high than their 52-week low. Average volume 118 million. Today's was 59. You can see a big sell-off throughout the day. Looks like they dropped a little bit midday, recovered a bit, and then right at the tail end of the day dropped again. Market cap of 541.476 million. A beta of 1.37. So they are more volatile than the overall market, and that may work to your advantage. If you were interested in this company, you could play that to your advantage and play that volatility and wait for a good buy-in opportunity. Very low PE ratio, though you'd want to compare this, and I did slightly look at some other ones like Stearns & Foster, Lazy Boy, those ones. And I mean, they're a little higher on the price to earnings ratio, PE ratio, but not much. 6.86 is a little low, but for the other furniture companies that I looked at, they were around 8, 7, 9, 10. So it's not really a lot lower, but it is lower than some of the other ones I saw out there. Earnings per share, EPS, is very nice at $4.87 per share. Earnings date, the next one is coming up October 30th through November 3rd. Forward dividend is $1.20 paid out on the year. They are a quarterly payer. Very nice dividend yield on this one, 3.58%. Ex-dividend date is June 5th, and it looks like they're going to pay out September 13th. We'll see their quarterly payments here in a little bit. And according to Yahoo Finance, where I pulled this information from, I am not affiliated, just one of the sites that I like to go to. They have an estimate of $42 per share, so it does speak to some upside appreciation for the stock price. Now, I like to jump into statistics and look at dividend yield theory to see if they are potentially undervalued. And to do that, you'd click on this. If you were to go to Yahoo Finance, click on statistics, go down to dividends and splits, look at their 5-year dividend average at 3.53, compare it to their current, right? 3.53, it's currently 3.58%. So they are slightly undervalued. Since this number is higher than their 5-year average, that makes them slightly undervalued. These are inversely correlated. If this number was lower than their 5-year average, that would make them overvalued. So slightly undervalued, really right in line with fair value currently where they sit. But nonetheless, slightly undervalued according to dividend yield theory. Now, they do have a very low payout ratio, 26.45%. So they have a lot of room to raise this dividend, reinvest in the company, pay down debt, whatever they want to do. Only 26% of their free cash flow is going to cover the dividend right now. So that is very nice to see, especially with a 3.58% dividend yield. They could really juice this one up over the next several years. Now, I also like to go into financials. A lot of good information here. You're going to find their balance sheet. You're going to find their income statement, their equity, their assets to liabilities, their debt. Are they paying down debt? Are they issuing debt? Are they issuing shares? That sort of information is all available for you there. We like to look at free cash flow here because we want growing dividends. And to have growing dividends, you want them to have growing free cash flow, at least positive free cash flow that covers the dividends, which again, if their payout ratio is only 26.45, they definitely are covering the dividend with room to spare. 2019, they had 46 million in free cash flow. A huge jump up in 2020, which this is not surprising, right? This is probably the effects of a lot of people going home and staying at home and buying furniture, getting that stimulus money during the COVID-19 issue there when they were pumping stimulus into the economy. So a lot of people probably went out and bought new furniture. If you're going to be home, new office furniture, that sort of thing. If you're working from home, that would be a big jump up. And that really is what you're seeing here in 2020. A drop back to normal back in 2021, though still elevated. So a drop from 2020 to 2021 to 63.1 million. And then another drop in 2022. From 2021 to 2022, it dropped back down to 22.6 million. So you're seeing a bit of a decline from 2020. And I would say, like I said, this 2019 is probably more in line with their average. Looks like 2022 is a little lower, but overall from 2019 to 2022, they have decreasing free cash flow. That is not great to see. Even though their payout ratio is low, you want growing free cash flow. So this would be something to watch to see what 2023 holds, right? But they are repurchasing their own stock. You can see that here every year they're buying back their own shares. And I did look at that. Even though they're buying back their own shares, that doesn't make up for the drop here, right? If you look at this, if you added these two together, that would only be about 51, right? Something. This would have been in the 70s. So 2019 to 2022, still a free cash flow decline. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. These are just two sources that I like. I'm not affiliated. Again, you can pick any two sources that you like. Just make sure you're picking more than one source so that you can make sure the information you're getting is accurate. Now, they only have one stock analyst that have taken a look at this. So it's not a big size to look at, right? It's not a lot of people taking a look at this, only one stock analyst, but they do call it a strong buy, and they have a low estimate of $41, which would be right in line with what we saw from Yahoo Finance. And they have 41 across the board for their low, their average, their median, and their high, which would be a 23.01% increase in the stock price if it was to happen to creep back up into there. All the while, you could collect that 3.58% dividend yield along the way. Now, I like to go into this, provides you a lot of the same information at stockanalysis.com, or the same information that Yahoo Finance does. You can go into the financials, see their balance sheet, income statement, all that information there. Statistics is one I like to look at because I like to look at return on equity and return on invested capital to see how financially efficient the company is with using their own money, reinvesting back into themselves. And I like 10% or better. So we look over here, return on equity is sitting at 24.70%. Return on invested capital is sitting at 16.10%. So higher than the 10% I look for. Very nice numbers here overall. Now let's look at the dividend growth. And very nice dividend growth, 11.52% paired with a very low payout ratio, 27.84%. Another thing that I like to look at is their payout rate. They pay in the June, August, November timeframe, March, August, November. Now, if you notice, I do want to show something else here, right? Back here on June 3rd, 2020, they were down at 15 cents. They raised it up August 21st to 20 cents. But then you'll notice this November payout, $2, right? So they do a special payout, it looks like, once a year as well. Now we'll go back through March, 22 cents, May, 25 cents, August, 25 cents. November, there's that $2 payout again. Then back to March, 24.21, so a little bit lower here, 24.21, but then June, 27, August, 27, November, the dollar, March 9th, 28, June 5th, 30 cents. So they do not only consistently raise their dividend, or have been consistently raising their dividend, at least lately, they pay out this special dividend. And I did go back further. I didn't clip it all the way back further, but this is consistent. It's not always $2, it's not always $1, but they do typically pay out once a year this big special dividend. So this one is returning a lot of capital to the investor, which is nice to see. Very nice dividend growth. Overall, the only thing that's a little concerning is the cyclical nature of their business, right? If we're entering a downturn, they may hit some rough patches, which again may present some buying opportunity. But everything, and their free cash flow is declining a little bit, which again would speak to a declining or potential recession that we're heading into. So again, people aren't going to buy new couches, new beds, new furniture sets if we're heading into a recession, or at least not as many people will be. So that may present some opportunities going forward. This one might be one to throw on the watch list. See if you can get it closer to that 52-week low. But right now, it looks at least fairly valued, slightly undervalued according to the metrics. All the metrics looks pretty good. Free cash flow, plenty of free cash flow to cover the dividend, and very nice dividend growth, and returning a lot of funds to the investor with the special, not only their regular payouts, but the special payouts throughout the year. Interesting company here if you're looking for something in the consumer discretionary space that sells furniture. Now this is vested interest stock screener here. You can pause this and go through this at your leisure. This is how I set up the videos as well, and how I look at a company on a high level to see if I'm even interested in investing in it at all. Obviously, I would do more of a deep dive if I am interested. And that's really it for this one. Let me know what you think of Haverty. Appreciate the suggestion, Tanya. Really appreciate you. If you have some stocks that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below in the description down below, and I will work it into the rotation. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, suggestions in stocks like this one here that we're looking at, or ones that we're avoiding altogether. Sometimes it's best to tell people what you don't want to invest in, and maybe that will prevent them from making a mistake or mistakes you've made in the past as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have something that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm going to share my opinion in investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.